What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. Today I'm joined with Adeola Oladimeji. That's Oladimeji. How am I doing?
Yeah, you got it. Yeah, about 90.
Why don't you try it on for size so we can get it right? How do you say your name?
Adeola Oladimeji.
Oladimeji. Okay, cool. Right. Okay, so there's a little bit of an intonation in there too. Yeah. Far out. So now you in the audience know how to pronounce his name, but let me explain why you're here. If you don't know, this is a chance encounter where I interview commercial real estate investors, syndicators, and operators. And why do I do that? Well, part of it is because it's the law, but the bigger reason is in any industry, you have to find the people who are also doing the same thing to find out if there's any overlap. The fact that you actually have to have that substantive relationship to share private deals, that's an extra thing, but that's a lot of what we're doing here. And I'm finding out what my guest actually does in this industry so that you can figure out if they're a good part of your team. But before we get too deep into that, Adeola, can you please introduce yourself to the audience?
Yeah, hi. Thank you, Dan. Thank you for having me here. I'm Adeola Oladimeji, like I said earlier. I'm the managing partner of syndicator, a private investment management and advisory company with a focus on real assets. So when I say real asset, it involves real estate, oil and gas, power, infrastructure, utilities, and small cash flowing businesses.
Mm-hmm. Awesome. And
but I'm based out of Canada. So right now we just focus on the Canadian market for now. When it comes to investing in real asset, but buying businesses, we can look at that globally.
Okay, excellent. So let's get on to the first part here. I always start off with the motivation piece first. And my reason for that is because I sometimes have newbies on the show and they know that they want to get involved in this kind of stuff, but they don't really know what they're going to be doing in it. So I have my screen shared here and it's way too big and now it's getting bigger, way better. 5 distinct motivations for commercial investors. This is what I find are really distinct, and let's find out where you fit on this. So the first motivation I found, some people, of course, you're a financier, so this is more likely to be one of the things you're up to, or depending on how many investors you have. But preserving your purchasing power means you already have the nest egg, and you probably already make ends meet based on the cash flow that comes from owning those assets. So why does somebody like that want to make a new acquisition? Well, every single time inflation rears its ugly head, you have to increase the cash flow. So you just borrow against the assets that you already have. That's what a lot of people are up to. That's not what I'm up to, though. My main thing is trading time directly for wealth instead of the normal way. I've got a background in technology. It means that I'm a high wage earner. I have an agency that focuses on CRMs, which is the better version of an Excel sheet, a spreadsheet for running your commercial business. But I realize that if you're making a lot in salary or wages, then you're also paying more in taxes than anybody else. And that's in the form of income tax. So I thought to myself, how do I get it where I'm getting that equity multiplication going with time, beating out inflation so that I don't have to take that intermediate step of paying income tax before putting more into those assets. So that's what I'm up to. But most people, it's pretty common for people to want to fast track their retirement. But what that really means is they want to gain control of their time. And that might mean that they don't want to work at all, but it might just mean that they want to work fewer months per year, fewer weeks per month, fewer hours per week, whatever it is. But the idea is scaling back, dialing back That's what they're up to. But the next two groups, the way that they're different is they're never going to quit. Like the super ambitious ones who want to buy their entire hometown, they're looking for that legacy generational wealth to make sure that their great grandchildren never have to hold down a day job. That's what they're up to. And then the other group that will never quit is because they picked a sector of society, or maybe it's the environment. Maybe they want to send people to the moon. Who knows what it is that they're up to? But basically, they realize that you need to have that financial side all buttoned up if you're going to make a really big impact on a sector of society or a group in general. So out of those 5 different motivations, Adeola, which one jumps out to you the most and describes you best, or what combination?
The most I have to. So the first one, which is preservation of the asset itself, which is one of the key motor for us. And the second one is building generational wealth. So without protecting the asset, there's no way you can build generational wealth. So you've got to protect the asset first. That's then you can, grow on that asset. That's how you build generational wealth. It doesn't happen overnight. Without an asset, there's no generational wealth. So those two, resonate with me.
All right, beautiful. And then the next question I have, this is the weird one. I had to add it in. Let me add this. Oops, that's not it. That's it. Okay, here's my screen again. Tolerance for risk assessment. I've seen some attorneys ask this, and I didn't like how they phrased it. So I wanted to get something that tells you a little bit more. Sorry for not prepping you for this one, but it's a fill in the blank question.
Okay.
There are many popular investment asset classes, but I think blank is too risky. What is there that a lot of people invest in that you're like, nah, that's not for me, and it's because of risk that you say you don't want to be involved in it? Stocks,
Stock
yeah.
I don't get involved. I have no control. I want to have a bit of control, whatever I invest in.
Exactly, the control. That's absolutely pivotal. Getting in on the blank, the ground floor, and knowing what you're on. So the next thing that we're going to do is we're going to talk about the roles, and I'm pretty sure that my filter, there it is. And this is, it's this one. Okay, cool. Now, when I hold this up, it looks magical, exactly the way I wanted it to. And if you want your own copy that's not quite so cool of the dandoesdeals.com commercial roll die with the 6 key roles in it, just go to dandoesdeals.com. It's totally free. You can print it out. I don't even ask for your email address. And from a marketing perspective, that's the worst thing you can do. You always ask for that email address. Exactly.
Some even ask for phone number.
Yeah, exactly. Phone number is the other one, so you can text. I never got into texting. That's part of the reason why I'm not so big on that. But the reason why I make this free, the reason why I want you to download and print out this die is so that you can become more effective at communicating the topic of commercial real estate. So you can show it to your family, show it to your friends. So I'm going to go through all 6 different roles just so that you can do that. So the first role you need to know about is the repositioner. The repositioner, I've got a picture. I got a few different properties here and a bunch of different papers to kind of give you an idea what they're up to. They're the acquisitions person. They're the people who are buying. They're the people who are talking directly to sellers. And what are they doing? Well, first thing, when they look at a deal, they need to do, there's a fancy word for this. They underwrite the deal, which means they do the math. They do the arithmetic. First thing they need to know is like, hey, is this property even actually making the amount of money that the seller says it is? But the term repositioner comes from like the repositioning part of repositioner is to change the property to find more upside. They're saying, how do I make more money with this property than it is right now? And they have 3 main tools in their tool belt to pull that off. First one, finding more advantageous lending from financiers, but that's not always a given. You can't always pull that off. So let's stay a little bit more practical and let's talk about operations. You got to make sure those Benjamins stop going down the toilet there. But of course, there's more than just collecting rent and unclogging toilets and taking out trash and all that kind of fun stuff in operations. One thing that I contribute to my GP teams is a marketing part, and that keeps your vacancy rate low. But I also am a programmer, so I also automate processes and use different software and things like that. But operations, making the property more efficiently run, that's a great way to find more upside. But when real estate's super hot, that's probably not going to be enough. So they get a contractor team. The repositioner gets a contractor team in there to do what's called a value add. Normal people would call it a renovation. In other words, they're making the units nicer. And then that way, the next tenant, they can charge more because
absolutely.
exactly, there's the upside. They can charge more. It's a nicer place and people will be happy to do it. But if the repositioner is like me and they're from the internet, they're going to need a local. They're going to need somebody who lives nearby, because that's not going to be me. I'm up in Canada where they have all the maple syrup and stuff, just like Adeola here. So I'm not coming down to the property. I don't want it. I don't want to deal with the airlines and all that kind of stuff. I'd rather get somebody who lives like an hour or two away. So you're going to need that in the team. But when the repositioner has that team put together and they turn around to the financier and say, hey, so I got this property, it's worth tens of millions of dollars, and the person's ready to go, I just need a loan. Do you happen to have, say, tens of millions of dollars you want to lend me? Well, the financier is going to have a little bit of a problem if all you say is what I just said, because I left something out. And what's that? It's the KP. The KP. And a lot of coaching programs, they skip over that part, and it's a bit of a problem because you need a KP to be eligible for the loan. So what's a KP? A KP is a person who already owns a similar asset. Okay. So if you want to get in on a 350 unit apartment complex, even if you're Jeff Bezos or something, or Elon Musk, somebody has to own a similar asset or you won't be eligible for the loan. On top of that, you need a certain amount of liquidity. And then you also need a balance sheet between the members of the GP team that's worth at least the amount of the loan. But if you got all those pieces, you've got yourself a commercial real estate deal. So Adeola, I understand that your primary competencies are the repositioner and the financier piece. Just to be clear, financiers, they only deal with money and paper. And in that case, they're not allowed on the GP team. They have to have another role. So the repositioner can do it and have some financier roles, but you can't just be a financier and be on the GP team. But have I got that right? Do you want to expand on that, or is that basically it?
Yeah, so I'm on the sponsor team, on the repositioner team, and on the financier as well.
All right.
So yeah, even the local, right? We invest. Currently, we have an investment in Edmonton, which is just about an hour, 15 minutes flight. So I can go to Edmonton in the morning, and in the night I'm back in Vancouver, BC. So I'm good. So I could see what's happening in the property at any point in time I want to see it. So it's not like 5 hours where I have to come to where you live in Ontario.
Right, exactly. We're not neighbors at all.
No.
Definitely. So the next thing that I always like to ask, though, it's the ideal property. And when commercial investors are talking to each other and they say, hey, what's your buy box? What's your ideal property? What you're looking for? They're really asking for three main things. The first one's geography. Okay, so that's going to be what state, what county, what neighborhood. You know, different people will have different levels of specificity as far as where they're looking. Super important. Second one is the size of the deal. And in general, on this show, I tend to interview more multifamily people than anybody else. So that's called unit count is what they use to figure out the size. But unit count will show up in office space. It'll show up in self-storage. You'll have the number of pads in mobile home parks. But if you're dealing with industrial warehousing, it'll be square footage, but that's the size. Now, the third thing they're going to want to know, it's actually two things, and they both have the same name, which I hate. But the first use of this term, the term is class. Okay. The first use of this term is talking about the condition of the building itself. And that has to do with like, how nice is it? How old is it? Okay. Is it all beat up? Is it luxurious, or is it more bare bones? Okay. So that's one version of class. The other version of class, it has to do with the crime rate in the area, the school districts in the area, you know, just how nice of an area is it? Okay. And both of those two, they rate them just like in grade school, where it's like C minus, B minus, plus, A minus, and so on like that. So Adeola, as far as properties that are best for you, it's easier to say yes, more difficult to say no. What are you looking for?
Properties in Western Canada. So right now, Alberta is a province. In particular, we look at Edmonton and Calgary. In terms of the deal size, we look at between 20 units to 100 units. Okay, between those units 20 units, 200.
Yeah.
Then in terms of the class of property, it has to be class B or B minus. But we'll not look at C. We'll not look at class C because there's too much. I think there's too much risk involved. Class C, class D. Then in terms of neighborhood, it has to be class B neighborhood. It could be class C as well, in as much as there's the demography in that space can actually pay, in that location can actually pay. And because we're looking for affordability, that's what we're looking for. We're not looking at class A, which is more on the luxurious end of things, right? So that's what we look for. Class B property, class B, class C location.
Okay, cool. So one thing I don't know, like I'm from Toronto, I don't know, like in Toronto, there was a ton of 1950s builds and a good chunk of 70s as well. Lots of that. Is that true in Edmonton and Calgary, or what vintage is really common over there?
I think 1980s. I think 1980s are more common, and that's what we actually tend to look at from 1980s upward.
Okay, so when Wayne Gretzky was playing for the Oilers, then that's when they were going build,
yeah.
Right, exactly. So my next question for you then, it has to do, like, that's the properties you're looking for, but what about the people? My favorite thing about commercial real estate is the fact that because there's so many different roles, everybody's always so eager to help out. They're eager to make referrals to complete your team and all that kind of stuff. And everybody has a different skill because nobody's going to be all six sides of the die for any meaningful amount of time. So because of its multifaceted nature, though, each of us has some people that we're better suited to help than others. Me personally, I'm better suited to help sponsors and KPs because of my marketing and my tech automation background, CRM background, because these guys actually have the foundation for me to be real, fuel to the fire. Whereas when you're first getting started, you need grunts more than you need brains. That's really how it works. So that's who I'm always on looking out for. And I don't even know the Canadian rules as far as like enticing investors. I know they're similar to the US, so it's probably a good idea. Like, they have the 506B deals in America, and those are the private ones where you're not allowed to entice investors publicly. And I know that there's also licensing in the accredited investor title in Canada, but try not to entice investors unless you know that it's legal. But who on the die, can you describe the investor or the operator or whoever it is that you're best suited to help, Adeola?
I think those will be the accredited investors. We can call them financiers in this case as well. Those are, I think they are easier to work with. And as you know, the definition or the criteria is more or less the same as what you have in the US. 200K in terms of your income for the last 2 years, and current year you have in about 200K as well. Or combined with your spouse or partner, you have 300K in the last 2 years, and expect to have the same this year and going forward. Or you have over $1 million, about $1 million in financial assets, or you have what's called net worth of over $5 million. So those key ones, I'm sure there are other smaller ones that you could take into consideration as well. But when it comes to accredited investors, those are the on the financial part. Those are people we're trying to, get on our team right now to use that, So, very much.
Awesome. And so then the last question is, how do people reach out to you? Like, we ended up meeting through some meetups. I spend a ton of time on LinkedIn. That's a great way to find me. But how about you? What's the best way to reach out?
LinkedIn is the best place. I'm on LinkedIn. I may not be commenting or anything, but I am on LinkedIn. I check my LinkedIn at least 5 to 10 times a day.
Right.
I always say that, and then when I see some posts that I need to make a comment here, and I do post at times as well, but I've not been posting as much as I should. Trying to share my knowledge. I've not been doing as much, but I'm always on LinkedIn.
Right. And then the commenting is more important, really. Is the posting is not as effective. But you were about to say, sorry.
Yeah, and at the same time, you can check us out on our website as well. It's ascendi-capital.com.
Mhm.
We have, so you can check us out on the website, and you can get my contact details in terms of the phone number and email as well.
Awesome. Awesome. So the only thing I have left then is not for you. It's actually for you in the audience, which is it has to do with this awareness campaign I'm doing. It's called Get Rid of All the Ugly Red Buttons. And under my left hand, somewhere over there-ish, there's this big ugly red button, and you just got to switch it. You got to get rid of it. And fortunately, it's really easy to upgrade your crappy red button to a wonderful gray button. All you do is you click on it. And what happens is that means that YouTube will start paying for these videos instead of me, which that's the magical power I'm really after. But the good news is it doesn't cost you anything. And all it actually does is it means my videos might show up on your list of suggestions, but you can go ahead and ignore those. That's perfectly fine, because you've done me an enormous favor by hitting that awful red. You've done yourself a favor by getting rid of, like, it's so ugly. I just can't get over how ugly that red button is. So you really should get rid of it for yourself, not just for me. But you don't have to watch my videos. I just appreciate you spending the time with me. Just like Adeola, I appreciate you spending the time with me today. It's been great getting to know you better.
Thank you so much, Dan. Thank you for having me.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me. Hi. Oh, hey. Yeah, here's my code. You got your QR code scanner? Okay. Yeah. Oh, yeah. Just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.